Following up on Alibaba stock, let's look at the stock performance, see what's going on. All right, here you can see it has crashed about 55% from its top, from $317, and has just terribly underperformed, especially when the markets gained during the same time frame over 30%. Absolutely depressing results. And you remember when I was saying in my previous video, when I'm loading up on Alibaba stocks and right after it hits the bottom of $139. Today, it sits right under 180 bucks. That's already over 20% return, and I am very glad I was continuously buying it. Now, I'm not saying that that was the bottom and the only thing that's left is the upside at the moment. The Chinese sentiment is still terrible. There are other factors around Evergrande, whatever that is. There are also other companies that are in a very similar situation, which can trigger trillions of dollars of disaster. Not a very clear future for these businesses. I mean, you already know this. That's why I'm not saying that it's only going to go up. In fact, it might actually retest the bottom this year. I don't know. Highly unlikely, but it's possible. For this reason, we need to be familiar what we are buying, what kind of companies we are buying, instead of buying just impulsively gambling with stocks, instead of investing in a company. Alibaba business is still growing, it's still evolving, and it has many smaller companies under its belt that are growing really rapidly and adding to Alibaba's growth. This is one additional reason why I like this, and I think this is a multi-bagger, a rare opportunity, especially compared to US markets like Amazon, for example. Amazon is way overpriced, at least 20%, like minimum 20% overpriced. Alibaba's market cap is still less than $500 billion, and it has a very good potential of over $2.5 trillion. That's a huge growth. You cannot get that with Amazon, at least not in its same time frame. Now, of course, there are theories against this theory that the government will continue this crackdown on these companies and will try to regain complete and sole control of their tech resources in the country. I don't know. I don't think so. Yes, of course, there will be some headwinds. You cannot be expecting a company to be dominating Chinese market or even US market and not be scrutinized and tested. This will happen, of course. But you gotta remember that that's good for us. These gyrations are opportunities to buy in the perfect time. This is how we can buy great companies at very, very good prices. Now, I'm no expert in politics, and in fact, I much prefer working with numbers, but it does not take a genius to know and understand that Chinese government is actually supportive of their economy. China was one of the fastest growing economies of this scale. It took their people by millions out of poverty. And what are these people going to do when they go out of poverty? They will be using Alibaba services. The government just wants to participate a little bit in the game and keep a higher degree of control. But, they do support growth of their economy. Their president mentioned several times that he understands and supports growth and strong development of the key tech and digital industries. And what is Alibaba made of? Tech and digital industry. They need their darling companies to grow. And that's the end of story as far as I'm concerned. As far as numbers go, the company is going insanely fast. The revenues are growing over 40%. The earnings are growing over 30%. Look. Right here, you can see the annual returns will be 47%, 30%, 45%. And that's from 2018 to 2019, 2019 to 2020, and 2020 to 2021. Now, we're still waiting for the results. In November, they're going to be announcing their results, and I'm very excited to read their reports and find out what their numbers are. I'll definitely update you on that, so make sure you're subscribed and click that notification button, the bell button. But yeah, you can see it's averaging out about 41% for revenue growth for last 3 years. Here you can see the earnings growth average for the last 3 years about 30% or 32%. So if I anticipate that Alibaba stock will add its lost market cap after this negative sentiment blows over, because nothing lasts forever, and this negative sentiment will absolutely change and become a very positive, just like it was very short time ago, you got yourself a multi-bagger. In conclusion, considering the depressed price of this company and negative sentiment and fantastic business performance, I still think this is an amazing opportunity to keep adding to my portfolio, and that's exactly what I'm going to be doing. Yes, I will be buying more even at this price, because my price target right now is anywhere from $288 to $381 in a short term. So I think that's pretty good. That's it for today, and I'll see you next time. Cheers.